We are getting close to the end of the showdown between Donald Trump and Kamala Harris for U.S. president. And based on who wins in November, there will be major impact to all small business owners. Some policies will significantly improve your bottom line, while others could crush it. While there's a lot of differences between wars and environmental and healthcare and all this stuff, I want to focus on 3 big categories that affect small business owners the most, which are taxes, regulation, and employment. If you're new to this channel, my name is Brian Beers. I help people make money by owning franchises. So let's start with taxes. The corporate tax rate. So as part of the 2017 Tax Cut and Jobs Act, Trump reduced the tax rate from 35% to 21%. He now wants to lower it to 15%. The argument here is that America had some of the highest corporate tax rate in the world, and that global companies would play these games to reallocate income to other countries with lower taxes. By reducing the corporate tax rate, more companies would move back to the United States, increasing the total dollars collected. The rate only applies to businesses that are set up as a C corporation and does not apply to LLCs and S corps. Now, most small business owners are structured as LLCs and S corps, so unless you plan to restructure to a C corp, this won't affect you. However, less taxes for big companies means they have more cash to reinvest in the business and more distributions to shareholders who spend that money in their local communities. Harris wants the opposite. She wants to increase the corporate tax rate from 21% to 28%. Increasing taxes means less working capital and tighter budget for these big companies, who then in turn may try to squeeze small business vendors on pricing to make up for it. Next is bonus depreciation. As part of the Tax Cut and Jobs Act, they introduced a 100% bonus depreciation on new assets purchased. Before this, if I purchased a piece of equipment for $10,000, I'd have to expense it over 3, 5, 7, or 10 years, depending on its useful life. Let's say it had a 10-year lifespan, and I spent $10,000, I could only expense $10,000 per year for 10 years. Now, with this change, it allowed business owners to accelerate those deductions. So instead of having to wait 10 years, I could expense all $10,000 in the same calendar year that I bought the piece of equipment. This is a huge benefit to anyone in growth mode. For me, I started acquiring auto repair franchises in 2016. This thing passed in 2017. And it has kept millions of dollars in our business that we could then reinvest to expand our business instead of paying that to the government, who will then just waste the money. So for example, we purchased a group of existing shops for $1 million. We put $200,000 down as our down payment and then seller finance the rest. And of that $1 million, we allocated $800,000 to assets. So this is like the lifts, the tire changes, the racking, the computers, like the physical stuff. And then through this division, we were able to expense all $800,000 of those assets in the first year, which saved us, $250,000 in taxes, which funny enough, more than covered our down payment to buy it. We had $200,000. Instead of having to pay that government, that basically paid our down payment. We didn't save anything over the long run, right? Because instead of spreading that $800,000 deduction over 10 years, we just got it done in 1 year, but then the next year we have 0 to deduct. And so this 100% acceleration started to phase out and will be completely gone by the end of 2026. However, legislation has passed the House earlier this year to extend the 100% to bonus depreciation. There's a lot of support around this, and if Trump wins, there's a great chance it will come back. It is unknown what will happen if Harris wins. However, what is clear if Harris wins is that she wants to find new ways to tax small business owners. And the first way is to increase the long-term capital gains rate. So this is a huge one if you own a business, both buying and selling it. So when you sell an asset, like a business, that you've owned for more than a year, the gain you have qualifies as a long-term capital gains, and she wants to increase it by 40%. So it's currently at 20%, they want to go to 28%. So what does this mean for small business owners? Well, sellers normally have a walkaway number. It's like the net cash that they want to keep in their pockets after paying off debt, broker fees, final bills, and taxes. Now, if the tax rates significantly increase, it means they're going to want a higher sales price, which means the buyer of the business needs to take on more debt and risk in order to buy it. Or it means that the seller can't find a buyer who's willing to pay that price and needs to continue working instead of enjoying retirement. So what happens here, though, is often a new business owner will invest into improving the business. They upgrade technology, they renovate buildings, they spend more money on advertising, and they create more jobs. What about that unhappy would-be seller who's forced to keep running the business? Their wallet tightens up. They spend zero additional money on the business. It's the same old computers from 2010. No one's getting raises. They aren't creating new jobs. The second big one is she wants to introduce a wealth tax. So they want a tax on the increased value of a business before it is sold. It's all on paper. So your business rises on paper, but you don't have the cash because you didn't sell it. And they want to tax you at 25% of your unrealized capital gain. Now, a realized capital gain is what I talked about earlier. It means you sold the business, you sold the stocks, whatever it is, and they tax you on the money that you made. But an unrealized capital gains means you have not sold the business, but they still want to tax you in the increase in value. But you don't even have the money to pay the taxes because you didn't sell it. Like, I hope this sounds crazy, right? The caveat here is that this wealth tax would only apply to individuals with a net worth of over $100 million to start. But historically, every new tax starts by targeting the uber wealthy. That's how the fox gets into the chicken coop. And then with a stroke of a pen, $100 million becomes 50, becomes 10, becomes a million, and then everyone is paying this. However, given our government's official love for the stock market, I doubt that this will ever pass, but it just shows you the train of thought of a Kamala presidency. If you have money, they want to find a way to take it. If you want to learn more of how to make money by owning franchises, then click the link below to sign up for my free weekly newsletter. I've been in franchising almost my entire life, and I've helped countless people start and scale their franchises. And every week in my free newsletter, I give tactical tips on how to find, operate, and scale franchises. Franchising is the best vehicle to build wealth and cash flow for people who love to follow a playbook. And I promise you will get value from it whether you're just getting started or running a multi-million-dollar franchise business like me. And after you click the link below to subscribe, you're going to get a welcome email that asks you to respond telling me about yourself. And I read every single email, so I look forward to hearing from you. Both candidates are talking about a new non-tax on tips, specifically those in the service industry like bartenders, wait staff, other hospitality. While this sounds great on the campaign trail, it would definitely lead to some complications for small business owners. What classifies as a tip? What about the manager who traditionally doesn't get tips? Do they want to share now? What about the owner? Can you reallocate wages as tips? And also, does it further accelerate the tipping culture that's already out of control? There's a lot of complications to deal with this one. I think it's more to try to get votes than an actual policy that they would implement. Let's get into regulations. Trump has talked about cutting regulations that stifle business growth. He's mentioned appointing Elon Musk to a new Department of Government Efficiency, which I think is kind of a joke name. But anyway, when Elon bought Twitter, he fired 80% of the staff. And today, the platform is better than ever and consistently rolling out new features. In business and maybe in government, often less is more. And on a live Twitter Spaces, Elon and Trump talked about this deregulation policy. And the main point they had was that we have a process in place to add new regulations, but we have no process in place to remove the outdated ones. So basically, every year they just stack and stack and stack, and there's no method to take out the old ones and say, hey, this doesn't apply anymore. Maybe we should get rid of it. Or maybe we have an updated version that just overrides this existing one. So cleaning out old regulations would be a huge win for small business owners who often get fined and slowed down by a lot of unnecessary red tape. But the biggest challenge here is that the government really talks about spending less. It's always about more of everything, more taxes, more social programs, more regulations, more healthcare, more everything. I would love to see both of them have a discussion around reducing expenses, but there's a big question of who gets cut, and that's the big problem. But Kamala wants more regulations. There's even mention of introducing a federal price controls in the food and grocery industries. While I understand the goal is to make food more affordable, it is a slippery slope that could have a massive impact. Price controls squeeze profit margins that are already razor thin, and small business owners could get crushed since they can't compete with the large companies. Buying power and payment terms will be negotiating points since they won't be able to compete on price since it's controlled by the government. On to employment. Now, Kamala supports the Protect the Right to Organize Act. Now, there are a number of changes that significantly strengthen unions. That includes overriding state-level rules, allowing for more boycotts, and prohibiting employers from discouraging joining the unions. Now, most of this won't affect small business owners, but there is one change that would significantly impact you. The act seeks to expand the definition of an employee to include more workers under labor protections, and potentially this will include construction workers, agriculture workers, domestic workers, and other ones that you traditionally hire as 1099. And this could affect millions of gig workers, freelancers, and other people, granting them the right to unionize, minimum wage, overtime, and other labor protections. Employers would have to deal with the cost of payroll taxes, unemployment, insurance, and more. So this is very bad if you own a business that uses independent contractors in any capacity. Trump, on the other hand, wants the opposite of this. He wants to weaken unions. And a big franchise-specific issue that has been lingering for over a decade is known as joint employer. Losing this joint employer battle could kill franchising as we know it. Pro-union people want to allow franchisee employees to unionize. So they want McDonald's employees all over the country to band together so that they can protest, they can strike for higher wages, better conditions, free french fries, whatever. But the problem is that every McDonald's restaurant is independently owned and operated by a small business owner. That independent owner decides who they hire, how much they pay, what benefits they offer, how they treat them. They share a brand name, a McDonald's, they share a playbook, right? But each independent owner hires their own people and makes those decisions. And so can you imagine what would happen if all independent franchise owners and franchisors were responsible and liable for the actions of a few rogue franchisees? It would kill the entire franchising model as we know it. Franchising got a huge win earlier this year when a federal court in Texas struck down a recent ruling. And in July, the NLRB, who is the pro-union board here, voluntarily withdrew their case, backing down on the issue for now. Many Republicans support passing a law that would clearly define the franchisee-franchisor relationship, which would permanently put this issue to rest. And let's hope that happens. A final note here on employment is Trump's stance on immigration. He has talked about massive deportation. It is unclear how they would handle the hardworking people who contribute to our economy and our society, and hopefully we'd be able to see a path to citizenship for them. If not, these policies could lead to massive labor shortages, increased costs, just having a smaller pool of workers. The biggest thing to keep in mind is as a business owner, you are in control of your own destiny. So it doesn't matter who's in office. You can adapt, you can pivot, you can thrive. And I just encourage you to vote in November accordingly for the best interests of your family, your business, and your community. Cheers.